go. Identifying various types of employee compensation, including fringe benefits and tips. Fringe benefits is what you receive from a job. It could be property, it could be investment income, it could be stocks, it could be many different things. But you receive that from your employer, and it's another way of giving you compensation. All right, 2, discuss business income, including income from farming, rentals, bartending. Discuss alimony. Alimony is what you receive, say you marry someone and you upgrade their life, male or female, like you bring them to a higher. Yeah, I know. I heard. She be over here kicking and cooling. She be chilling. I got one damn shoe. Okay. And that is, another thing. The videos that's on YouTube, they edit it. So a lot of our like intermingling parts, that's not even on there. It's just like straight up just lesson, okay? The YouTube video is like just lesson. All right, but here we go. Learning objectives. Here we go. Identifying various types of employee compensation, including fringe benefits and tips. Fringe benefits is what you receive from a job. It could be property, it could be investment income, it could be stocks, it could be many different things. But you receive that from your employer, and it's another way of giving you compensation. All right, 2, discuss business income, including income from farming, rentals, bartending. Discuss alimony. Alimony is what you receive, say you marry someone and you upgrade their life, male or female, like you bring them to a higher state of living, then they have to pay you now so that you can maintain that life. Alimony is court ordered. It is decreed. If it is not court ordered, that's not alimony, okay? That's not what alimony is. Alimony has to come from the court. If the court didn't say it, then that ain't alimony. All right, so next, summarize other types of income that may be fully or partially taxable, such as savings, investment income, unemployment compensation, and Social Security benefits. All right, most people who receive Social Security are not cutting taxes out of it, okay? Now, for the people that do cut taxes out of Social Security and they can't file it, but most people not. Unemployment compensation is only up to that person to cut the taxes out. Now, if they do not cut the taxes out, then they will start owing at a certain point. Congress did adjust the tax law to where people could receive up to $10,000 depending on the state that they were in for unemployment. But I do believe that also with the reversing of the child tax credit and earned income credit, that has also came back too. But I had to verify that and I'll get back with y'all. All right, so next you got to summarize the general rules of community property. And then 6, we're going to compute taxable and non-taxable income. So not all income is taxable, and that could be, and we're going to discuss that. This is important for my people that may receive a 1099 for your Cash App, your Zelle, your Stripe, and things like that. Those payments that were money to pay you back for reimbursement of your personal funds, that's non-taxable. Those payments that were for goods, services, sales of objects and things or whatever it could be are taxable. So gifts are not taxable. And that's for my people who may receive a 1099K in January due to Cash App. And if you made more than $600 for the year with Cash App, you probably is going to receive a 1099. So if you got more than $600 in Cash App, probably gonna get a 1099. Most likely you're gonna receive it. And I recommend that you wait until you receive that 1099, because if you file before we get the 1099, your tax return will get held up, and then you'll have to wait another 3 to 4 weeks before you get a refund. So key terms. We got compensation, fringe benefit, gross income, instrument, and wages. All right. All right, so first thing first, employee compensation. Employee compensation is earned income. It includes all taxable income and wages a taxpayer gets from working or from certain disability payments. Taxable earned income includes wages, salaries, tips, other taxable employee pay, union strike benefits, net earnings from self-employment, long-term disability, and benefits received prior to minimum. And unearned income. It includes any income from investment or such related sources to employment, such as interest, dividends, alimony, child support. That's unearned income. Wages and compensation. Employees receive a W-2 in exchange for services and are classified as wages. Okay. That is what we use when we come up with the paycheck stub estimation. All right, 1099 miscellaneous and 1099 INT. These are for non-employee compensation, and these also you got 1099Ks. These is another form of employee non-employee compensation for those that use third party. So if you use a third party to receive your funds, then you receive a 1099K. If you are not an employee, so say you're an independent contractor, you work for me, but you work for yourself, then you may receive a 1099 miscellaneous. And then the last one is the W-2. That's most of your employee compensation. Okay. All right. Form 4852, taxpayers should receive their Form W-2 no later than January 31st. If a taxpayer does not receive the W-2 or their tax forms by January 31st, then there may be a need for Form 4852, which allows for a taxpayer to obtain a W-2 and correct the W-2 should it be needed and report his income, but only after February 15th. So what this is for people who do not receive a W-2, you can do a Form 4852, which is a replacement W-2, and it's based off the paycheck stub. But at the same time, you don't want to use this because you want to wait until you get the actual W-2. Now this is not Form 4868, which is the extension. This is 4852, which is a form that can be used in replace of a W-2 should employer not send out the W-2 to the employee in the right amount of time. All right, next you got fringe benefits. Fringe benefits must be included as taxable income unless the law specifically excludes the benefit or the taxpayer paid FMV. FMV means fair market value, okay? Fair market value. Cash reimbursements made to employee made under reimbursement arrangement. And if they do not receive these unreimbursement, then they can use employee business expenses on Schedule 8 to claim those expenses. All right, examples of taxable fringe benefits. All right, taxable fringe benefits will be employer paid accident and health insurance, employer paid life insurance, employee purchase discounts, no additional cost fees, transportation fringe. All right, so employer provided group term life insurance. All right, not including the income for coverage of 50,000 or less. Coverage of more than 50,000 must be included. No additional cost service. The value of the services taxpayer receives from an employer for free at cost or for a reduced price is not included in to the employer. They're just going over that. Just examples of what they will state is fringe benefits and the employee receiving it, such things as hotels. All right, employer provided educational assistance program. Sometimes your employee may help you continue or further your education. And that's explained in box 1. You may sometimes include those benefits, and if so, it's going to state it right then and there. All right, sick pay. Sick pay is important. Pay received from an employer while the employee is sick or injured as part of the employee's salary or wages. COVID was a big one with sick pay. It's not just sick pay, it was more related to the fact that Say you had a sick child and you missed work due to that, and it was due to COVID, and there was actually I think it was like $508 of refundable tax money per day that you could have received. So it was like 14 days, so 14 times 508. It's like, I had to do the math, but it's a lot of money. But it was like $5,000 for people that had COVID and had to watch kids with COVID and stuff like that. That they got, yeah. Only if they did their taxes right. So sick pay is similar to that, but COVID was very much bigger than that. Sick pay is what you get when you like get sick at work. I don't know. All right, medical expense reimbursement. Expenses for which the taxpayer has received reimbursements are not deductible. That's with everything that an employer does. If they reimburse you already, you can't double state it as an expense on your tax, especially if you already got the money and they got record of them giving you. IRS will come get you. All of everything that the employer does or spends money on is reported on the W-2. So if they did reimburse you already, it's gonna already show on the W-2, so there's no need to discuss it. This is already added in the W-2. All right, the taxpayer is covered by his employer's medical insurance policy. All right, disability insurance, employer provided meals and lodging. Okay. All right, do not include an income, the value of meals and lodging provided to the taxpayer and his family by the employer. The meals are furnished on the business premises and are for the convenience of the employer. The lodging is furnished on the business premises of the employer and are for the convenience of the employer and is condition of employment. Do not include an income, the value of meals or meal money that qualifies as diminished fringe benefits. All right, so what they're saying is say you're a trucker, flight attendant, somebody that receive a per diem whenever you travel for your company. Is stating that when you spend extra money outside of your per diem on food, that is not included in the original income that you had made for the year. So that is considered reimbursed. You can claim that as employee business expenses, even though you did receive a per diem. They explained it right. All right, cafeteria plans. There's some people that get cafeteria plans. Tip income. All right, tip income is important because not everybody works a job, especially in America, where they receive regular wages. Some people work just off tips. With that being stated, tip is important, especially if they didn't report all their tips to the employer. This is just further explaining that. For unreported tips, which is 50% of Social Security and Medicare tax owed. All right. And it's just telling you that if there is a situation where they need to report unreported tip income, you would literally just type in the software unreported tip income. When you want to add the form, you search the index and then you add it, and it's called form 4137. And then whatever was the unreported amount, you would just put it in. Okay. Business income. This is important. So business income. A sole proprietor is an individual owner of a business. I'm a sole proprietor. It's classified as self-employed. I am self-employed. Reports income on Schedule C, which transfers to line 12 from the 1040. I am that person. May be required to complete Schedule SE, which stands for self-employment. And that is the reason why I have to pay about 15% of what I own to the government. If I wasn't a tax preparer, but I prepare taxes, I never pay that much. Who would? All right, so income from rents, royalties, partnership, estates, and trust. Okay, I know you've been watching on Instagram, social media. Everybody been talking about trust. Trust this, trust that. You sell everything to your trust, put everything in your trust. And then on estates, okay, estates is when me, myself, I am Terrell Vallery. I now have a little person. So my little person can gain my estate. So Michael Jackson has an estate. Michael Jackson did not have a will for his estate, which is why Michael Jackson had to go to probate. And in probate, that is when they split up his estate. Okay? It's important. Now, if Michael Jackson had a will, or if Michael Jackson set up a trust, and all right, so will is still you going to probate. I just want you to know that, because everybody will know about what you got going on. They will know about your estate and what your estate had going on. But a trust is private. It means only people that are inside the trust understand what is going on. A trust is what I would recommend you set up, especially if you plan to do taxes on a major level like I do. Because this is something that I want to pass down to my future generations. Not technically have them work in tax office business, but just technically pass on the funds. A trust is really cool. It's really cool. Check them out. Check them out. If you don't have a trust, check it out. Put it in motion. It's really cool. Partnerships. Partnerships are one or two people together that own the business. That own one business. And you cannot be a sole proprietor and have a partnership. You can't do both. Only be you can have multiple partnerships that you're in, but you can have a sole proprietor. So you can't have a Prxnce.Tax and have Prxnce.Tax and cousins. It don't work like that. It only be Prxnce.Tax, and then that's all my businesses are wrapped in one. And then they all report on my one Schedule C. Or I can have multiple partnerships with different businesses and different in them. All right, so income from rents, royalties. All right, so again, all of this is mainly reported on the same thing. This income is reported on Schedule E. Like I was stating, each schedule is different. Rental income or foreign income is reported on Schedule F. Schedule K1. Okay, so my K1 people are people that usually a lot of your eBay people, your people that sell on eBay, online sellers, people that use third-party processors to report their income. So my people with e-commerce businesses, these are going to be Schedule K1s. And what's going to happen is they're going to receive 1099Ks. Now, depending on how their partnerships work and how they're paid, they may receive the 1099Ks early, or they may receive it after April 15th or after March 15th if they're like their own business and have their own report.
Right next time.
No problem, no problem. Just teaching the class. I hope they're still with me. All right. Yo, yeah, y'all still with me. All right, so farm income. All right, farm income is reported on Schedule F. All right, so farm income, it comes from farming. It is, but not limited to sale of farm products, livestock, grown or purchased for resale, agriculture program, custom hire, barter income, cancellation of debt. All right, bartering. Bartering is the exchange of property or services. The taxpayer must include in his income the fair market value at the time of bartering. Bartering is generally reported on Schedule C. All right, clergy members. Clergy members are members of the church, okay? These individuals must include income also, offerings and fees received for marriages, baptism, funerals, masses, etc., in addition to salary. If the offering is made to the religious institution, it is not taxable to the taxpayer. So if they give their money back to the church and they don't really, it's not taxable. But if they keep their money, it's taxable. Most of them get their money back. If the taxpayer is a member of a religious organization and gives his outside earnings to the organization, he must include it in his income. So what they're saying is, say you have a clergyman, and they work as an Uber driver too, because clergymen do a lot of things. I was doing one tailoring one time, and he wasn't really a clergyman. He got this thing like offline or something like that, and now he be out here like literally doing ordained, situations, and he got it offline. But hey, all the best to him. All the best to him. He gets his money. And he look good in his suits too that I made for him. All right, so that just further explains. Every time that he does his Uber driving, he has to report the income. Now he does have to report his income from him doing his ordained stuff, only if he doesn't get the money back to the church. Okay. All right, clergy special housing rules. This is important. Doesn't happen a lot. Say you do get a lot of clergymen. Under the special tax rule, the taxpayer is not required to report his housing allowance and utilities income. The housing allowance must be provided as compensation for ordained, licensed, or commissioned minister. All right. This is really mainly important for those that like just clergymen. Okay, just only clergy people gonna come at you and talk to you. It's alimony.
What they do?
Say it again.
What do they do?
Who clergy? Clergy is the churchman. That's like your pastor, your preacher.
Well, I need to look into that. But okay.
Yeah, that's like your pastor and your preachers and stuff like that. That's a clergy.
Okay, they ain't got to report all that.
They don't have to report it only if they are not. They don't have to report it only if they're giving the money from the baptisms and all that stuff to the church. But if they are keeping the money, then they have to report it.
They be lying, but I.
No problem. I'm pretty sure they do. All right, we on alimony now. Alimony. Funny for that one. So here we go. Alimony. Alimony is a payment or a series of payments, okay, to or for a spouse or former spouse required under divorce/separation instrument, which must meet certain requirements. The main requirement is its court order. If it's not court order, it's not alimony, okay? And that's really with the divorce part. And the main thing about alimony is reported for both the receiver and the person that's giving it. So you cannot report alimony receipt payments taken in if the person that is paying out the alimony is not putting it on their taxes. It will in turn create a problem, and it will cause a red flag in the system. All right, so taxpayer and spouse receiving alimony do not file a joint return with each other. The payments are cash in the form of cash, check, or money order. The decree of the income does not state the payments are not alimony. See what I'm saying? This is the court order part. All right, mortgage payments. Mortgage payments, if the taxpayer is required to pay the entire mortgage payment on the home jointly owned by himself or his spouse, he may deduct 1.5 of the mortgage as alimony. He can deduct 1/2 of the mortgage as a payment on Schedule A. So what it's stating here is, if a taxpayer is required by law to pay for half of the house, he definitely can technically call that alimony. Him or herself can call that alimony, because sometimes women have to do alimony. Mary J. Blige had to do alimony for that dude, and then had another person, I think Wendy Williams. She just like, she doesn't do alimony. I think it was something that happened with her with alimony, but yeah, that happened also. All right, so taxes and insurance. So it's really big. It's really big. Something that really happens a lot. Taxes and insurance. The taxpayer can deduct 1/2 of payments made as alimony if he is required to pay all of the real estate taxes. All right, so mainly all of this is related to alimony, and just the different versions of how someone can be paying for someone else, due to the fact that they once was married and no longer married now, and they can use these as their deductions to save them on the Schedule A versus and this is like within the first, it all depends on how long that written instrument or that decree states, but that's how this works. All right. Alimony recaptured. Other types of income. This is important. Interest, capital gains, losses, state tax refunds, recoveries of items previously deducted, income of a child, scholarships, fellowships, child support, unemployment compensation. All right, so state tax refund. You receive a state tax refund on Form 1099-G. It's gonna come in the mail. most individuals that receive tax refunds, depending on how they got their tax refund, may not actually receive a state tax. They may actually owe the state tax. And I'll explain that in a few moments. And the reason being is because they made money and they didn't pay to the state. All right. But most people that do receive a refund from the state, like the individuals out of the state of Georgia this year, in many years, Georgia always has a higher state tax refund than those other people from Alabama, just like those from people from New York receive a higher state refund than individuals from, Georgia and things like that. And the reason being is because states have like extra amenities such as like rent reimbursements and things like that when you are living in their home, in their states. All right. Recoveries of items previously deducted. A recovery is a return of an item deducted or credit taken on a prior year. It is reported in the year received up to the amount of deduction and credit. Most common recoveries, refunds, reimbursement, rebates previously deducted. All right, so when you do get a state refund, most of the time you can apply to your line 21 form 1040. All right, income of a child. Income received by a child is taxable to the child. This remains true even if under local law parents are entitled to the earnings and receive them. Parents must pay taxes due if the child doesn't do them. So what this is stating is, say you have a child, they made about $9,500 of their own money for the year. With that being stated, that money was considered taxable. And so with that being stated, there is some tax that's due on it. Now, say you file your child as a dependent, you still have to file your child's tax return. He just files as a dependent of you. And whatever is left over or whatever the tax is due, that is what's due. That's all it's stated. They're not saying that just because it's your child, that child doesn't owe because they are your child. They still owe. If they make money, they owe too. All right, scholarships and fellowships. All right, scholarships and fellowships. These are other forms of income due to the fact that, say you have doctors, you have lawyers, you got doctors, lawyers, tradesmen, laborers, unions, all those type of things, and they paying you to work in these locations. Like doctors normally go on scholarships or fellowship about 3-4 years after receiving their the paperwork that says that they're a doctor. They do like 3 years of fellowship, and this is what they're speaking about. It's not real money, but it's paying for them to be in the place where they're at. They don't technically get to go spending and things like that most of the time. All right, child support is neither deductible to the payer nor reportable to the payee. All right, so if you receive child support cannot be used as earned income, okay? Unemployment compensation. Unemployment compensation is only taxable up until the point of $10,300. It used to be fully taxable. It is 10%. Now it is up to the taxpayer to decide to pay that 10%. If they do not choose to pay that 10%, then they most likely will owe for that unemployment. All right, Social Security and equivalent railroad retirement benefits may be taxable up to 85%. Some railroad benefits are not taxable, and I have a list of those, and I will tell you. All right, paying back items previously taxed, and there's a few more slides, and then we're gonna actually do the tax estimation. Then I'll be done. All right, paying back items previously taxed. Repayment of an item included in income within the prior year may be deducted to the extent repaid for the year in which the repayment was made. For items over $3,000, a credit may be able to be taken against the tax in the year in which the item was repaid. All right, so mainly thinking about things like other income, such as hobby income, awards, gambling, winnings, lotteries, jury duty pay. That's a big one. Activity, not for profit. All right, so income received through activities from which the taxpayer does not expect to receive a profit must be reported on line 21. Deductions relating to the income is subject to 2% of the AGI. Example would be hobby income, okay? All right, cancellation of debt is big. A lot of people got their credit fixed. A lot of people pay off debts, and a lot of people get debts canceled. Now, when they do get that debt canceled, they have to pay the full amount of the debt. So, if the debt was $2,700, but they only paid $1,200, and that $2,700 will actually go on their tax return, not the $1,200. Okay. And that's what cancellation of debt is explaining. All right, rental of personal property. A taxpayer who is not in the business of renting personal property does rent to someone who must report their income on line 21. Next to the line, should write PPPR. Deduct expenses associated with the personal property up to the amount of PPR income on line 36 from the 1040. Examples: truck, tools, various types of income. So, say you have an individual who has a rental property, they rent it out, but they don't have all the proper paperwork. It's two ways to report them. One, you can just do a Schedule C, or two, you can do it the way they just stated right here. And this would allow them to properly deduct the expenses from their income without having to do the extra self-employment tax, because you really save the money when you do this. All right, bartending. More review questions. Community property. All right, community laws may not apply to an item of a community income that the taxpayer received but did not treat as community income. If the taxpayer is responsible for reporting all the income, if he treats the item as if he only is entitled to the income, he does not notify his spouse of the nature and amount of the income by the due date for the filing of the return. Okay, that's a lot of knowledge. All right, taxable income and non-taxable income is important. I'm just about 4 more slides and then we'll be done with this chapter. Taxable income. In most cases, an amount included in the taxpayer's income is taxable unless it is specifically exempt by law. Examples of non-taxable income includes workers' compensation, welfare, and veterans benefits. All right, this is a list of taxable incomes right here. This is a list of non-taxable income. So as I was stating earlier, gift/inheritance is non-taxable. Welfare, non-taxable. Unemployment is taxable. Child support, non-taxable. Okay. These are just review questions. These are the types of income that you can expect to run into throughout the tax season. Definitely gonna run into vacation pay, sick pay. Most of these will be already reported on someone's W-2. Farm rental income, that's something that you may have to add. Trust/estate income. This is a whole nother type of return. Partnership S-corp income. Depends on how they claim that S-corp or their partnership. You may have to actually file a whole nother business return on their behalf. Royalties, all this is business income. That's something that you report on Schedule C most of the time. IRA distributions, that is something that you receive in a form. Notary fee, hobby income,